Hi traders, this is Brad Gilbert with the FX Market Insight for the 6th of September. All right, now let's just have a look at the major currencies. There's a lot going across the news wires, but mainly a lot of noise as opposed to sort of genuine moves. Now the Aussie, we've had a couple of key releases this week. It is continuing to sort of trade sideways short term, but overall longer term, Aussie and Kiwi are still trading to the downside. Now with that huge spike yesterday in sterling, it's taken a number of these currencies with it. The Aussie climbed a little bit. Euro got the benefit of the stronger sterling as well, as did some stops triggered in the Kiwi. Now there's a bit of a downward slide slightly in dollar yen, but overall it's continuing to trade sideways. Dollar CAD still edging to the top side, but the Bank of Canada, just look at the price action here. There's so much pressure and news and emphasis devoted to the NAFTA situation that even with a hawkish Bank of Canada, it's just traded sideways for the last sort of 16 to 20 hours. All right, they are waiting. Oil has drifted lower to 68.60, which supports a move to the top side in dollar CAD, but it's all about NAFTA, right? Now, there was hope that there would be a deal through the night. That hasn't come about. So watch your screens during that North American session. We may see some sort of deal. Now, you would expect the way that Canada's held out, it should be positive for Canada. So we could potentially see a correction lower in dollar CAD, and that goes with the sort of hawkish tone of the Bank of CAD, but against that move in oil. So there's a fair few things to think about with dollar CAD at this point. Now, if I just bring you across to check out the two big dogs in the yard, okay, what I'm talking about is the dollar index, okay? It's continuing to sort of bang away sideways. Don't get sort of caught up in these short-term little fluctuations. In the big scheme of things, it's just trading sideways at the moment, nothing to really write home about. Equities, while I'm on there, a sea of red, so that's no big deal. But once again, they're only sort of single-digit numbers, so nothing to write home about. The dollar China or dollar yuan, it is continuing to trade sideways in a reasonably large range, 200 to 300 point range. But at this point, it is continuing to trade sideways. Now, I do expect if Trump increases the tariffs, then it's got to take another run to the top side. It's the only way this thing can play out is a weaker yuan, right? So we'll see how that goes. Now, if I just bring you across, I just want to get up to some of these news services so you can see exactly what is going around. Now, I think this is a bit more logical reporting. Asia shares a sea of red on trade, emerging market anxieties. That's more like it. Not the fear, not everything else. The market's just a little bit anxious about what's going on. There's the US-China trade deal potentially, and there's rumours through various media outlets saying Trump's going to increase things, etc., etc. I mean, it's just a whole heap of crap that we get sick of hearing, but that's what's out there. Now, there's some talk of some more oil deals. I mean, increasing oil demands. I mean, these guys here, someone should pull them aside and give them a spanking. They are up to no good. They haven't got enough money now. I don't know when they will. But now, so the other sort of news, I mean, we're starting to get into a little bit of back to normal sort of news. Aussie dips after trade data. Now, the Aussie trade balance, it's not a big release, but the funny thing was we did see some weakness in the exports, right? They're expecting plus 3%, it was minus 1%, and that sort of tumbled lower. Aussie has drifted lower primarily because the US dollar has rallied against the yuan. So a weaker yuan, a weaker Aussie, that's the way it works. Then you've got a whole heap of emerging markets. We get, Indonesia, Turkey, everywhere. Argentina, the whole emerging market sort of scenario is just falling off the face of the earth. There's a whole lot of rumblings there. One thing to note is in Australia, there's been a housing crisis or shortage or bubble, I should say, for some time. Now, the economy is starting to slow down and they are hiking rates here, not the central bank, but the local banks. So that's going to put a lot of pressure on the housing market. We may see the economy even slide a bit further. So that's something to build up as we go forward. Now, sterling, there's a whole heap of stuff changing on Brexit. Now, there was sort of contradictory comments or news items out of Bloomberg and a few other services yesterday saying that the EU and or even Germany were going to sort of brush aside a whole heap of hardline deals and just get a deal done. Apparently the Germans came back and said, no, that's not the case. So, but there's a whole heap of rumblings. If you have a look at the price action on sterling, and this is a good time to come back to the majors. Have a look at the price action on sterling. It was rather wild. I mean, you could be sitting there scratching your head, and then all of a sudden it takes off from 128.20 up to almost 130, 129, sort of 85. Okay, a pretty solid 170-point move, 150-point move. And then once the sort of Germans said, no, it's rubbish, it just started trading sideways. So now we're back in the middle of nowhere. And you'll notice on the analysis, I mean, sterling has gone back into a real sideways trading situation from here. So it's, you know, there's so much crap going through the market that it's very hard to work out exactly what's what. Now, if I just bring that across the MyFX Trading Hub, now what we can focus on is what's in front of us. Okay, this is where you can really sort of focus on some of the trading opportunities. Now, I spoke to a few traders today about you know, the situation where geopolitics are dominating. The thing is, don't fall in love with your positions, because when currencies are on edge, basically around you know, geopolitical issues, someone can say something stupid and the currency turns around very quickly. So make sure you're not looking for too much out of these moves. They are not central bank directed. So you're not going to get the big trending move. You are going to get sporadic, sharp moves left, right, and center. Okay, and that's it. Take the cash, wait for the next opportunity, because if you start to run things, it will turn around and bite you very quickly. So looking at the upcoming events, we've got a situation here where we've got US ISM non-manufacturing data. That's the sort of key numbers, and that's pretty much it as far as the major numbers that I'm looking for. If I come back to the main calendar, you'll also notice there's a whole bunch of other key releases coming out today, which you know, pretty much could come into play, especially with the volatility in a number of these pairs. So just keep an eye on dollar Swiss. We've got the GDP numbers. Now, these are rarely sort of too wild, but you want to have a look and see if there is any variance in the Swiss data. And then also we've got German industrial orders there as well. That's probably another good one which could potentially impact the euro, obviously, as we go forward. And the US initial jobless claims, right? This is not a precursor to the non-farm payrolls, but some people do. It's just a weekly number. It's been hanging around for the last probably 2 or 3 years, 4 years. With the sort of volatility in the dollar, and not that the dollar is exceptionally volatile, but the sort of crux of the market, where the market is getting anxious and traders are getting anxious, this number could has the potential to come in and impact if there's significant variance in those numbers. So even though I've got just to bring the MyFX Trading Hub back up, even though I've only got the ISM non-manufacturing highlighted here, right, there are other numbers to sort of consider, but this is the only one that you need to be square for if you are in the funded Forex trading program. All right, now let's just scroll down here. Just clear the screen. Just having a look at the overall picture on the sentiment. Now, I've got the US just drifting back into a sideways situation. Aussie still bearish, and Kiwi probably still the best trade at the moment. Now, dollar CAD, an interesting one. The Bank of Canada came out very hawkish, but with NAFTA dominating, we do have a situation where the funds are just trading sideways and they have a sideways bias. Now, on that note, I'd just like to give you a slight little update. I've actually changed or just made an adjustment to the central bank outlook, where I've included now the statement instead of where the interest rates are. That's pretty irrelevant to us. What their statement is, and that adds to the overall tone. Now, you'll understand that this is dollar CAD, right? This is the summary for dollar CAD. The Bank of Canada are hawkish, and the inflation is above their target, right? But that's hawkish for CAD. That's bearish for dollar CAD, right? So make sure you get that right. But you'll find that statement set up across the board on all the daily analysis summary pages, so you can actually have a bit better look at where we're getting that central bank outlook from. Okay. And that's pretty much it, guys. All I can say is give you some feedback on what I'm sort of getting asked about a lot. And that's, when you're looking at the markets and you are trading various opportunities, don't get so caught up in, let me just come back to the major charts while I run through this. Don't get so caught up in the big moves, right? When the central banks are talking, we do see big moves. This stuff here, let me just make that pen a bit thicker. When you see moves like this with Brexit, okay, you're going to get wild moves. I expect potentially something massive here on dollar CAD. If anything, to me, NAFTA's got to be a good deal for CAD for them to get into it, and that could see a big move to the downside in dollar CAD. It could almost be a really nice break trade down through 131.60, to be honest. And then with that, I'm just focusing on the pairs that have the best sort of core direction at the moment. Now, if I just, now that sort of trend line there on the Kiwi is short term. And if you look at the Kiwi, it is it's sort of starting to trade sideways, on an hourly perspective. But overall, on the longer term picture, this thing is trading down, and we have a dovish sort of tone from the central bank. Kiwi, to me, is still a sell. Probably at this stage, a sell on rallies. But I'm looking for opportunities to get short Kiwi on dollar strength as well. Okay, guys, so that's pretty much it. The US ISM non-manufacturing will be interesting for the rest of these major pairs. Don't forget, we've got German industrial output and Swiss GDP numbers. Don't forget sterling. This puppy here, expect more out of Brexit yet. This thing is a long way from being done. It can go to being completely off, a deal being completely off to being completely on, and we're going to see wild price action. So it's a good thing to plan. If you see some of the crosses, sterling crosses with potential entries, then it doesn't hurt to place break trades here and there, because you might get a very good opportunity on that pair. Now, dollar yen, okay, this is where the US-China trade tariff situation first impacted, and it is pretty neutral. So it goes to show you that the market is becoming desensitized to that trade situation. Trump needs to either increase the tariffs, or the data needs to start impacting China. Otherwise, the weaker one is just going to play into China's hands and offset those tariffs. So it's going to be an interesting one from here. All right, guys. Now just keep it, as I say, clean, but keep it relatively safe. Your capital, that is. We're a long way from getting through these geopolitical situations. NAFTA, to me, is the big one to watch out for today. As I said, though, we were expecting something yesterday. Hasn't come up. We may see something today. I would think so. And if we do, it's got to be positive for CAD, and I'm thinking this thing down. So you can see how it's just trading sideways. There's a bit of a horizontal line there around 131.60. Could be a good opportunity on the downside. All right, guys, have a good trade day, and we'll catch you later on. Cheerio.